Tuesday, October 17th, 2017. Monaco 64, home of alternative economics and contrarian views. So it's a little later today. It's 3:45 p.m. London time. So this is not really an early market update. Yesterday, precious metals traded fairly well most of the day, most of the European day, so to speak. And then towards the COMEX regular hour close, which is, 1:30 p.m. New York, gold just started trading lower. And then after that, the COMEX close, it went further down. And this morning, throughout the day, we've continued to go lower. Right now, spot gold is $1285.50, down about 9.5. Silver is down about 17 at 1705. The ranges have been 1283.60 to 1296.60 in gold, and in silver 1702 to 1727. So a little disappointing after the really good rally we had off the non-farm payroll low of around 1261 up to 1306 roughly. So basically the move we've made has retraced this 50%, has been a 50% retracement of the move since non-farm payroll. Maybe we did go up a little quick and gold's just taking a breather before going higher, or maybe not, we're going to go back down. But all in all, of course, I still, recommend people buy physical gold, physical silver. I guess the problem with the paper market is that a lot of the speculators, a lot of the funds, they trade the paper, they trade the COMEX, they trade the OTC paper market, LBMA in London. A lot of hedge funds are not allowed even to hold physical gold. So the game keeps going for now. But longer term, gold is still the best monetary insurance. Right now, with the stock market and all asset classes being quite complacent and elevated, I was reading that the amount of open positions being, speculative open short positions on the VIX, which means short volatility, is at an all-time high. So maybe there's too many people on one side of the boat and the boat's gonna list back the other way. I don't know. Difficult to say. I know I interviewed Bo Pony last week. Controversial. I know I got a lot of flack from a lot of people. Some people liked it. But I have to say there are other people that have quite a good reputation, like Charles Nenner, expert psychoanalyst who used to work for Goldman Sachs. You probably listened to him before on Greg Hunter. Not on Greg Hunter, Greg Hunter, USA Watchdog. And he's been saying for the last month or more that it's time to get out of the stock market. And his cycles, the last year or two has been saying, no, it's not going to go down. It's going to keep going up. But you need to get out before the end of 2017. And it might have kept going up a bit more since he's told people to get out. But as he says, he'd rather be safe, than make an extra 3-4% and then, lose 30-40%. He thinks that the stock market is turning now, and we're going to go down for the next, he thinks next 3 to 3.5 years. He sees a bottom sometime in 2021. So that's going on out there. In terms of the other markets right now, the Dow's up 23, up 0.1%. S&P is actually down on the day, down 2 points. The NASDAQ 100 is down 4 points. So that's what's going on there. And with that in mind, I'd like to talk a little bit about gold. And I'll take a snippet from the Pocketbook of Gold. A survival manual for monetary mayhem. I've done this before, of course. by James E. Sinclair and Peter D. Carlin. So this is on page 60, and it says, and this is pertinent to what's going on right now. It says, gold is a barometer of fear and confidence, not inflation. And they quote Peter Monk. Peter Monk, I think, was the CEO of Barrick Gold. I don't know. I'm not sure if he still is, but he's a big guy in gold mining. And he said this in 2009. And I quote Peter Monk from this book. Gold is no more than a barometer. It indicates the general feeling of security people have about other asset classes. If you feel safe, hold other assets. If you are concerned, and let me tell you, most people in the world are concerned, then you move to gold. That was in 2009, so I guess it was a good time to move to gold because, you know, we bottomed around 670 in 2008, and we went up to 1900 in 2011. So he was right at that time. And he says the biggest driver of the gold price is a fundamental lack of confidence in government. And I would add central banks to that as well. And so I'll read a little bit here and I'll try to make some comments on what the authors say. Gold is a barometer of confidence in political systems, and more importantly in governments, to provide both a proper environment for economic growth and general existential security. Well, how is the political system in the West these days? I would say it's very fractured and very uncertain. We just had a 31-year-old, right-wing candidate win the election in Austria and become the youngest, leader in the West. He's the chancellor now of Austria, or prime minister, whatever you want to call it. You've got the situation in the UK with Brexit. You've got Catalonia. You've got Donald Trump and the deep state and the shadow government fighting it out in the United States. A lot of uncertainty. So I know it hasn't translated into much higher gold prices, but the conditions are there. And it goes on to say, this is one reason why gold rises at times of unresolved conflict and war, because confidence is waning and security concerns, both personal and economic, are heightened. And I think what they mean by conflict and war, it doesn't mean like the squabbles with North Korea and Iran. It means major wars. Something we haven't seen in about 70 years in the West. And it says, this is historically provable. In fact, the gold price chart can be actually mapped in geopolitical terms, both nationally and internationally. People's perception of geopolitics is an indication of confidence or the lack of it. And the demand for gold reflects this. This does not negate the idea that gold is a currency. Rather, it confirms it. So, and it goes on to say, gold is the common share of general confidence whose price moves higher as political, economic, and security confidence declines. So I would say all the conditions are there for that to happen. I think central banks are slowly losing credibility. There was an article yesterday on Zero Hedge, and I'll put a link below to it. And it was from a fund manager in London saying that the central banks, the last time they acted like they're acting now, there was a lot of violence and war, and it was a bloody time back in the 1930s. And that's quite interesting that mainstream wealth managers in London, private banks are saying those things. Right now, with the stock markets, very complacent, volatility or fear very low. What does that mean? That means that insurance is very cheap, as people are not worried about financial instability. But let me tell you, when things shift, and we don't know when it will shift, it will be a huge shift because the system is really leveraged. And people are leveraging a whole lot, mainly because interest rates are so low and they need to leverage, or else they don't get enough return. Be that hedge funds, be that endowments, or family offices, wealth managers. They need to get a return for the money, that they manage. So that's what I wanted to talk about. So yes, disappointing move in gold, price-wise, but I think sometimes we are too myopic and we look too closely at the price instead of looking, at the fundamentals and longer term and what gold really means, an insurance. If you want to trade it, of course, that's a different game. So if you enjoyed this video, please like, share it far and wide, subscribe to my channel if you haven't yet, and you can also follow me on steemit.com and also on Twitter, and I'll talk to you later. Bye.